Let's get a gut check with Tim Seymour, CIO of Seymour Asset Management and a CNBC contributor. So nice to have you
Great
here,
to be here in
Tim.
person, Leslie.
It feels
Yes.
like one of those kind of inflection point weeks as we think about what's going on with SPACs, what's going on with IPOs. We had the CoreWeave lockup, which offered a lot of insiders a chance to finally sell into the market. And so we saw that stock decline as well. How do you kind of look at all of this, especially given, we don't expect IPOs to really come to the market until after Labor Day. So we do have a week and a half or so to really digest all of this.
Look, the markets have seen a lot of liquidity. Markets are, even after we've had a couple-day pullback, I think as we get to the end of the summer, it's light liquidity overall. I'm not surprised to see some of this caution after a heroic run from the April lows. So the SPAC resurgence and certainly some of the household names or the rock star names in SPAC land taking advantage of, we've never had more enthusiasm around some of these big thematic plays. And whether it's AI, whether it's, defense, whether it is American exceptionalism dynamics that really now implies almost anything, investing in strategic sectors where we think the government wants to be involved. Whether you like it or don't like it, these are places to find investment themes, and typically SPACs have rushed towards that. And in the last 5 years, I think with some also refocus on regulation, transparency from the SEC around SPACs, I think there's a sense that maybe things are a little bit more under control. But it doesn't surprise me, given where markets are and the FOMO that we have around crypto and AI and other hot sectors, that SPACs are back.
Yeah. Do you think we could expect any rollback in some of those Biden-era regulations surrounding SPACs that would unleash, what we saw back in 2020, 2021?
As someone, I sat on a SPAC board once. I believe in various financial products. I believe in regulation around them. I think SPACs at times have a place to get companies to market very efficiently, very fast, give both the companies themselves and investors and sponsors around SPACs a chance to capitalize on those moments. I think that's fine. I think investors need to really think about where there's warrant attachments, where there are redemptions, where there are dynamics around liquidity. Ultimately, think about valuations, because the SPAC structure historically has tended to price companies a lot more expensive than if they'd gone a more traditional route. And I don't think the track record of some of the best known SPACs over the last 5 years is great. And there are a couple of standouts. There's a lot of dead wood on the side of the road.
Yeah, and it's up to investors to really do the research there. Speaking of investors, a lot of this is being driven by retail investors, and we've seen them have pretty significant wins this year, being out front, after Liberation Day and buying that dip and so forth. How do you see all of that as a signal for the market, the retail involvement there? And what does that tell you about kind of where we are in the market cycle?
It's nice to see the retail investor on some level armed with all kinds of technology and information, was less concerned about the institutional investor who often is investing for a monthly cycle or sub-optimizing based upon dynamics that are really more related to their business than the market. So I think it's great. I do think that part of this pain trade has been institutions trying to catch up. I do think there's a lot of froth and FOMO in markets, and I don't think it's a one-way ticket. I do think there are dynamics that we all know, whether it's Fed liquidity or the sense of more Fed liquidity on top of the liquidity conditions we just talked about, are part of why the last month has been so raucous in terms of liquidity move. I think you can't tell me that the market hasn't rallied around expectations of what the Fed's going to do in September and possibly there on out. Is the setup, CTAs are max long. You have retail max long. You have a lot of hedge funds that have increased both their gross and their net longs. That's a real reason to be more cautious around fundamentals, that you can take both sides here. But I do think that the markets are in a place here when liquidity, after a big run, when liquidity is light, end of the summer, people are looking at some of these trends. I wouldn't make a big deal out of a lot of them. I think the outperformance of the NASDAQ to the S&P was making a new relative high a couple weeks ago was very important, although you've given some of that back. I think that the market will continue to be led by those big stocks.